there was an auction for the US 20-year bond market, and it was weak. There was weak demand out there. Now, what happens is when investors are concerned about the path of inflation, and that's particularly what's going on at the moment in the bond market. You see around the world, you see yields are pushing up. And what investors are concerned about is that inflation is still pretty resilient. We've seen Canadian CPI out earlier this week showing that inflation is stickier, it's firmer than markets are expecting. And that means that investors are just concerned that interest rates, um, if they're going to be cut, with a number of central banks moving towards cutting interest rates, and there's sort of fiscal stimulus coming up, particularly like out of the US. But at the same time, inflation is still problematic. It just means that central banks are storing up the problem for later on, and it's going to be a worse problem than it currently is now. And that's why yields are moving up because they're anticipating that the market will have to end up, hiking interest rates even further in the future.